Hey guys, how are you? Andy Superfinance here, Y2K Credit Solutions, also a consumer credit expert. Today I have a great topic to talk to you guys about, and actually someone asked me about this topic, and I thought it was interesting because a lot of people have this notion in their head that what bad credit is same as good credit, or what's the difference between bad credit or good credit. So today's video, I'm going to do a comparison about good credit and bad credit, and what it means, right? So good credit, bad credit, it's kind of almost the same, right? If you have bad credit, which means you have collection charge-offs, derogatory reporting on your credit report, your score is below a 680, and 680 is considered 680 is considered subprime, right? Because that's the subprime world. That's where it begins. 680, 620, 500s, 520s. You get into the those ranges. You're gonna become a subprime. That means that you'll get a proof of credit, all right? But you're not gonna get a proof of the prime credit cards. You're not gonna get good credit rates. You're not going to get good terms on your auto loans, mortgages, whatever it is that you're doing, right? So, bad credit. It's, when you have all these negatives on your credit report, and, you expect them to like miraculously or just disappear. It's not going to disappear. It needs to be addressed, right? It is going to disappear, but it's going to take 7 years for that bad credit to disappear. Now, I mean, in the day and age that we live in, I'm not sure how you can live without credit, because credit is a driving force of anything that you're gonna be doing in the financial world in today's day and age, right? You wanna buy a home, you wanna buy a car, you wanna get good credit cards, you wanna get a student loan, you wanna get a personal loan, you wanna build your business credit up. It all reverts back to having good credit, right? And good credit is elite. It starts at 700, 720. That's the elite credit score, which means that consumers are paying their bills on time. They're not defaulting. They're not maxing out their credit card. They don't have more than 6 increase on their credit report. Banks are more prone to give those guys, those clients, those potential credit-worthy client better terms, better interest rate, better deals on their loans, right? On their mortgages. So, that's good credit. On bad credit is having all these negative charge-off collection accounts on your credit report that you're hoping to miraculously disappear. It's not overnight. Trust me, it's not going to disappear overnight. In 7 years it will. But again, you run into the issue where, depending on the creditor, whether it be a Citibank, a Discover, Capital One, Chase, after 7 years, depending on the debt and the creditor, that debt could turn into a judgment renewable for 10 years. And a judgment can be renewed one time. So once it's entered and it's default, you don't resolve it, it's there for 10 years with interest. Right before the 10 years comes to an end, if the attorney is still in business, the creditor is still trying to pursue the debt, it can be renewed for another 10 years. What's happening now is that a lot of creditors and attorneys, if it's a default judgment and you have a property, they're attaching that debt to the property, or they're attaching it to public record. So if you going to go buy a property, when they run public record on you, that judgment is going to come up. No bank's going to want to give you a mortgage, and it's specifically for mortgages. No bank's going to want to give you a mortgage because you have an open judgment, let's say for $10,000. Because what happens if they fund that mortgage in your name, now that judgment becomes first priority. If you sell that house, that judgment has to be resolved first. With interest. Don't forget the interest. Interest is very important. 9% interest. That judgment has to get resolved first, right? Now, if you own a home, if you own a property, and they do a skip trace on you, and they find these judgments out, and the judgment was entered against you, it's going to be attached to the property. If you sell the property, the judgment has to be satisfied first. So your net proceeds, the profit you can be making from your sale of your property, it might minus another $20,000 depending on how much you owe on that debt, right? Having bad credit and no credit is really almost the same thing. Having no credit means you have no footprint in the credit world. or you lived off the credit grid for such a long time. If you lived off the credit grid, listen, more respect to you, right? I don't know how you did it, but if you did it, that's awesome. But no credit means, or what the CFPB considered invisible credit means you have a very thin profile, right? Sorry, I mixed that up. When you have no credit, means you have no history, you have no resume, right? No resume, you have no trade lines, no loans, nothing. You lived off the map. You don't have a resume, you have no report, right? And again, if you lived off the radar with no credit for such a long time, especially in today's day, that's awesome. But you still have to build the credit up, because if you're trying to use credit if you're trying to use your credit to get a loan or whatever you're trying to do, get a credit card, banks want to see some history. It's like a job. If you go to a job interview and you have a resume but it's very thin, or there's no data on it, companies not going to want to hire you, because they want to see experience, they want to see qualifications, they want to see that you've been in the work industry, in the working field for 2+ years. It's just like a credit report. If you want to apply for auto loan, car loan, credit card, mortgages, student loans, bank want to see that you have some history, that you're paying things on time. And if you have a stale report, or if you have an inactive report, that's considered same thing as no credit, right? So you have to have some active accounts. Now, people ask, how do you do that? Well, listen, I've spoken about this in previous videos. There is the secure credit cards. There is the authorized user credit card option, and there's the co-signing for a loan to start building your credit report, putting activity on the credit report and bringing it alive, right? It's a very interesting topic, because some people are in a situation where they have bad credit or they have no credit, and they're like, why do I need credit? Or what's the difference, right? Yeah, bad credit is just like having no credit, because you're still going to be treated the same way by a financial institution, and the fact that you're not a credit worthy client for them. They're not going to want to extend credit to you, and if they do extend credit to you, they are going to charge you with a high interest rate and bad terms that just going to get you into debt in the future, because you're going to be upside down on whatever you're paying, right? And this, when I say upside down, I mean towards your auto loan, your mortgage, or your loans, right? Not so much your credit cards. So bad credit, good credit, it's something we don't want to have at all, to be honest with you. You want to try to preserve and maintain a decent credit report, at least with 2 to 3 active trade lines, prime trade lines. You're paying it on time. You're not going charge off, you're not going negative. You want to maintain, it's more easier to maintain somewhat of a decent credit profile than to try to start from scratch, right? And don't get me wrong, there's nothing wrong with starting from scratch. We have a lot of clients in our office that they come into our office and the credit report is so bad that there's nothing positive to save on it. Even the closed accounts, they're already closed and active. There's nothing to save on it, so we have to rebuild them from start. But in those situations and those scenarios, our clients know how to rebuild their credit and maintain it the right way now, because they have the credit education that they need, because we teach you that. We explain that to you. We show you how to do that, right? So they'll never be in a situation again. So, there was a great question someone asked me about good credit, bad credit. What's the difference? What does it mean? And listen, you don't need me to tell you paying your bills on time, don't maxing out your credit cards, only having 6 increase in a 12-month period is how you maintain your credit and keep your score in the elite scoring model, like 720s and up, right? You don't need me to tell you that. But if you do need me to tell you that, I'm going to tell you here in the video, that's how you do it, right? But you should know that already by watching all of our previous videos, following us on social media, and so forth. Now, this video is actually going to lead into my next video, which has to talk about building kids' credit. There's a lot of information on the web about it. A lot of people are talking about it, telling you how to do it, and a lot of the information is actually factually incorrect. So my next video is going to be about building your child's credit at a young age. So you want to stay tuned for that video. But if you have any questions about this video, good credit, bad credit, drop a comment below and I'll definitely try to get back to you about that. All right, talk to you soon. Have a good day.